Hello, my name is Jason Giordano. I'm a partner with Judelson, Giordano & Siegel CPA firm in Middletown, New York. Today we're going to be discussing the 2012 Taxpayer Relief Act. The 2012 Taxpayer Relief Act will prevent many tax hikes that were scheduled to go into effect this year and retain some of the more favorable tax breaks that were set to expire. However, it may increase income taxes for some of the high-income individuals. Starting January 1st, 2013, the employee FICA tax will revert back from 6.2% from 4.2%. This 2% increase will immediately affect every working American's paycheck. The Taxpayer Relief Act will add a top marginal tax rate of 39.6% for individuals making more than $400,000 and joint filers making more than $450,000. Previously, the top marginal rate was 35%. Thus, a 4.9% increase will apply to those taxpayers in 2013. For 2013, the Act provides the top rate for capital gains and dividends will be 20%, previously at 15% for incomes in excess of $400,000 for single filers and $450,000 for joint filers. When you combine this with a new 3.8% surtax on investment income and gains, the overall rate increases to 23.8%. An increase of 8.8% on capital gains and dividends. Some good news for taxpayers under the Act comes in the form of a retroactive fix to the alternative minimum tax. For tax years 2012 and later, the Act permanently increases the AMT exemption and allows for inflation adjustments going forward. What this means for those taxpayers potentially affected by AMT is possibly thousands of dollars in tax savings. Now let's discuss some of the provisions under the Act that affect businesses. The Act extends 50% bonus depreciation for qualified property and extends the expensing amount under Code Section 179 from $139,000 to $500,000. So business owners will get an immediate tax write-off for 2012 and 2013 for investments in furniture, fixtures, and equipment up to $500,000 as long as their overall investment purchases do not exceed $2 million. In addition, the Act extends for 2 years the inclusion of qualified leasehold improvement property, restaurant property, and retail improvement property as a 15-year tax write-off instead of the normal 39-year tax write-off. The Act also allows the taxpayer to expense up to $250,000 of these qualified improvements under Code Section 179. Normally, these improvements are not eligible for immediate tax write-off. So what this means is that a taxpayer who's fixing up commercial lease space can now write off up to $250,000 of improvements and the balance over 15 years instead of the normal 39-year. This also applies to restaurant and retail improvements that are either owned or leased. If you have any questions regarding the 2012 Taxpayer Relief Act, please contact our office at 877-740-9500 or visit our website at jgspc.com.